the Gould Mine Podcast.
I heard you on a couple of podcasts, Mark, talk about some innovative financing solutions. So can you discuss some of the creative strategies that credit unions are using today to kind of help real estate investors secure financing?
Yeah, sure. We see, every potential solution out there we're kind of open to. So we'll see a lot of people, pull out the second mortgages, blanket leads, using that success that you have in your portfolio as a way to leverage it for the future. That is by far and away the most common method that we'll see. The other piece of maybe particularly when you're starting out, you're in a very good financial position and we'll pull out those home equity loans. We also are there's I try to tell people to avoid the hard money lenders, but there's some people out there that will do the renovations for you, constructions for you, renovating some properties at a little bit higher rate, and then we're terming that out upon completion to help minimize so that we're all in a safe position going forward. And we also look, if in today's world, if you're a business and have you occupying that business, there is a ton of government programs out there to help you out. Particularly, like I said, that SBA 504 program, it's a little bit of paperwork, but it's giving you more money than you ever would be able to get through a lender at the lowest rates in America. So, and that's really where we'll try to be creative on that local and state level to get you the funds that you need. A good chunk of those the 504 loans is where people are doing 90% financing of projects at 20-year fixed rates that nobody else in America could touch.
Understood. So what it seems to me, Mark, is just to kind of walking through this through my own knowledge and through our conversation today is a lot of the benefit of working alongside a credit union for your financing needs is maybe not even in the upfront or the first loan, but it's the flexibility and the growing together part over the course of a 5-10 year period, doing multiple loans where you could really start to see the benefit of working with a credit union out, as opposed to a major, like a big bank. Is that more am I getting that correct?
Yeah, absolutely. If you don't value a relationship and it's just we're simply a cost of goods for you and your financing, go to the big bank. If you actually want to talk to somebody and value not just this transaction on getting you a fair deal, but getting you the fair deal in the future, because we're consistent for you. Yeah, we're a good option.
So looking at a more macro level, just with commercial real estate in general, obviously, what's happening right now, or at least I would assume you do, right? With, all of the, the maturing debt. I think I saw on TREP the other day that the amount of debt in the commercial space coming due in the next year, I believe, is $250 billion, $250 billion in commercial debt. So what trends are you seeing right now with all of those things happening? And how are credit unions helping, or in what ways could credit unions potentially help through these uncertain times in the sector?
Yeah, sure. And you're exactly right. And what we are seeing consistently is the bigger market you are in and the bigger property you have, the bigger problems you have. Yeah. And the owner-occupied building piece of commercial real estate, a few $1 million, small balance transactions, properties in second and third tier cities, they haven't missed a beat. What we're really seeing is the more of an influence work from home and hybrid schedules have on your property and your marketplace, that's an indicator of you need to manage this a little bit closer. And I'll give you a good example of, we're in Philadelphia. That's where our company is headquartered, in the sort of suburbs of Philadelphia. And to drive from one area town to the other is 2 hours. Well, that's really where we're seeing those pressures of, okay, you can work from home 2 days a week or come in occasionally. Versus if you're in Birmingham, Alabama, where it's a 30-minute ride and there's hardly any traffic from one stretch to another, those companies and regions are saying, come into the office, it's no big deal. And culturally, it's not as big a deal to go into an office. So and that's really driving this real estate push. If you're the accountants, the attorneys, they're all figuring out, well, people can get their job done. So that's the types of properties that we're seeing. Surprisingly, everybody talks about retail. Good retail space is good retail space. If you have the aging 1980s mall, that was done before COVID and those were dying. But good retail space is good retail space. If you have cold storage warehouses, bring it to me. I love them. Those types of properties. And obviously many of the factories, things where people need to work together. We're seeing fine, but those smaller second and third tier cities that, quite frankly, a lot of real estate investors shied away from are the ones performing the best for us today. Now, you asked what credit unions can do for this. What we are seeing is, remember I said credit unions are lending their own money? And this is not borrowed. When you borrow your money, when you're arbitraging your money and getting your money from somebody else, you're playing by their rules. When you're dealing with a relationship with your own money, you have flexibility. Now, there are some deals that just need to go away. And like the Great Recession, if you have money in cash, you can pick it up and rehab this property and turn it into something else, and you can make it at a pretty good penny. But if it's kind of that mid-size commercial real estate property, we can then have that conversation because we aren't beholden to, maybe the market rates are 7%, 7.5%. Well, if we have to cut it to make a deal work, we're really negotiating with ourselves. And that's the flexibility that we have today. Some of my best without a doubt, my best years in lending were during the Great Recession, because credit unions can control their own balance sheet versus sometimes the traditional banks and big lenders.
Makes a lot of sense. Well, and you kind of spoke to it too. What's interesting is a lot of the data is actually corroborating exactly what you just said. So everything that you just said makes sense to me. Retail is actually performing quite well. Obviously, during COVID, there was a little bit of I would say a scare there, but retail is performing well. The office sector is not performing well. And what you're saying is that it's really dependent on the cultural norms and then like the requirements of the jobs, right? That those offices are kind of like housing. If it's an office full of like you said, right, like accountants, well, they're like the accountants can get their work done at home. And culturally, if it's in an area where it's harder to get to work, it makes sense that those are the office buildings that are suffering the most. Right. So that makes a lot of sense to me. What about hotels? We talked a little bit about that before we got on the show. But what are you seeing in the hotel space right now? Which hotels are crushing and which ones are hurting right now?
Yeah, we're seeing really those flag spaces that have the good loyalty programs in nice markets doing very, very well. even in those second tier type of properties, they are doing very well. The aging hotels need to fix themselves up. And so those scare the heck out of me. We try to avoid them. But really those nice, kind of the Marriotts, the Hilton flags, we see them as just very reliable with steady occupancy rates. The pieces that we're seeing the most hurt are the ones that really were much more the staycations and regional travels, and even many of the short-term rentals that surged during the pandemic time, where people were staying within an hour or two. It wasn't long-term vacations. It was just, let me get out of the house and kind of go up where I live to the mountains for a little bit. The short-term rental business is we're seeing many of those in certain segments take a beating because of local government regulation. Local government regulations is going to kill this industry. But also, and so if you overextend it in terms of those where you're just not seeing the rentals that you once were. But for travel in general, life is good. Business travel is good. Conferences are busier than we've ever seen.
Yep.
And that's really driving that steadiness.